Welcome to our podcast series, where we bring together industry leaders to explore how Treasury is evolving in a more connected and real world. Hi, SP. Great to have you here. Thanks for joining us in the podcast series.
Thank you, Kelvin. Happy to be here and fantastic to get acquainted.
As a start, would you mind introducing yourself to our audience?
Sure. Kelvin, my journey in the banking sector has gone through many countries, many markets. Most of my career prior to Citi was with an European financial institution. And I worked across 4 or 5 countries before landing in the sunny shores of Malaysia. And that was predominantly in the area of corporate banking, structured finance, structured banking, some new economy financing, and now transaction banking.
Let's start the topic about services, okay? Basically, Treasury and Trade Services. That's the full name of the department, right?
Yes. It's a tongue twister sometimes. It's called Treasury and Trade Solutions.
Yes.
And it falls into globally what we call, now it's called as services as a whole. So it has custody, it has investor issuer services, it has transaction banking, everything put together.
So in ASEAN, what do you think the service is unique of? What is the common issues and pain points your customer is often facing?
Yeah, Kelvin, that's a good one. ASEAN, while it's one single economic bloc, it is also a congregation of countries with varied regulation regime. And because of that, free movement of capital and cash is not possible like it is possible in Europe and some of the other developed markets. That creates challenges for our clients and their treasuries when they look at consolidating cash, consolidating liquidity, managing their working capital efficiently, running consolidated functions across regions. So common things that come up when we discuss with clients, and that's where we come in and offer them suggestions on how to be more efficient in their operations.
It's great to hear about that. And international, as you know, so we are one of the leading fintech companies in the region, providing service almost in all countries in ASEAN and most of the countries in Asia Pacific. So the pain points you mentioned actually are common to us. Yeah. We also face these pain points. Well, Citi, and in particular the Citi service department, has been a long-standing partner of us. We have been receiving a lot of interesting services, help and partnership from Citi. Would you be able to share with us what is the Citi's approach to address the unique pain points in this ASEAN region?
Kelvin, we typically try and mirror requirements of what our clients are demanding of us. Now, if you look at the profile of corporate or institutional clients that Citi has, it would fall into 3 broad categories. We have our SME client portfolio, we have the commercial banking portfolio, and we have the institutional banking portfolio. Now, when you look at these problem statements of consolidation of liquidity, managing exposures across different markets, etc., these tend to be more pertinent for clients who cross $1 billion in revenues and going all the way up to 25, 30 odd $billion. Now, when you look at the first bucket, which is the clients who are in the 0 to 2 billion sort of mark, they are not so fussed about all of the problem statements we spoke about as much, which is why you will see that in-house bank structures, regional treasuries are 10% of that client population. Okay. When you go to the next bucket, which is clients in the $2 to $10 billion revenue threshold, there you will see that almost 30% of the clients would have centralized functions. Go to the next bucket, up to $10 billion, and that number just flips. So 2/3 of these clients are interested in all the structures, regional treasury center, international headquarters, in-house banks, all of that comes in. And the bucket beyond that, 70-75%.
Okay.
So that's how, and when we look at our clients, we would know what stage of commercial complexity they are in, and we would advise them accordingly. So then we bring in our solutions around, of course, the traditional solutions focus around physical movement of cash, physical pooling, notional pooling, multi-currency, multi-entity pooling structures. But now, as the demand moves towards more real-time stuff, then we are bringing ideas around tokenized services, how the funds they have can be digitized into a token and how it can be moved around the globe in a real-time fashion.
Okay. So we are a user of Citi token service,
Yeah.
which is the real-time global money payment vehicles that you created to serve the largest category of customer you just mentioned. From your point of view, how these new technology, Citi token service, created based on the blockchain technology, could potentially help merchants in this region to address the pain points that you just mentioned?
Kelvin, if you look again at the institutional client category, they have 4 sets of problem statements of goals that they're trying to solve. First would be, for example, liquidity and investments, how to make most of the liquidity that you have segregated across multiple markets. Second would be on subsidiary financing. There could be few subsidiaries doing really well. There could be few who are not. How do you manage all of subsidiary financing from a headquarter perspective or a regional headquarter perspective effectively? Third is, working capital and banking. How do you consolidate that into one location to bring down number of bank accounts, rationalize financing costs, rationalize cost of transaction banking, all of that. And the last one is risk management. So these are 4 statements that most large corporates grapple with. Our whole idea around digitized movement of cash or tokenized movement of cash would help in solving these 4 aspects of a client problem.
So because ASEAN obviously had multiple currencies, and also most of the country have their unique FX regime.
Yes.
So specifically, if a company operates in all these ASEAN countries of different FX regimes, what is the best way to manage their liquidity?
Because of different regulators viewing movement of cash very differently. Few markets allow convertibility of currency, few markets don't. So when clients historically were looking at creating these pooling structures, either a physical pool or a notional pool, more in the physical pool domain, it also accompanies with intercompany loan agreements, intercompany agency agreements. You have to look at, for in Malaysia context, for example, FEP guidelines, foreign exchange policy guidelines, how much can you lend and what you can do. Of course, that gets sort of, I wouldn't say bypassed, but that whole problem statement can be managed a little more easily if we are moving to a tokenized movement of currency. Right? So currently, for example, Citi operates that service in only 5 markets, which is Singapore, Hong Kong, New York, London, and Dublin. But of course, the endeavor is to expand that. And what it does for our clients is that you do not worry about cutoff times anymore. You do not worry about losing translation time in moving currency across a few markets. It's instantaneous. So that is what it will solve going forward.
And international, we are a company, as we mentioned, deeply rooted in this area. For the Citi token service, we actually had used it in all the 5 locations you just mentioned. It helped us to greatly improve our globally liquidity situation, reducing working capitals, reducing foreign exchange exposures, and also actually make our global fund management much more efficiently. So now we're trying to bring this into ASEAN. So by working with the regulators and some of the local institutions, we're piloting tokenized bank deposit and relevant tokenization technologies in a few ASEAN markets, including here in Malaysia. So whether we can solve the last mile issue of the global liquidity management. So by having that over here, we want to see whether we can work with banks to allow like money movement, probably from or in and out of Malaysia using a local currency, tokenized local currency, and then link to, for example, a settlement currency, say in dollar or euro, and then go to another side of the world. With this kind of linkage, we hope that it will also be able to allow us to achieve so-called global real-time treasury extending this country. But of course, we are still piloting and trying to find out how this works. So normally, for customer, for more sophisticated treasurers, what would be the suggestions you give to them for the next step, for the future of treasuries that you are creating?
You summarized it well to how the future state should look like. I mean, definitely, there is so much inefficiency and there is so much idle cash lying around different subsidiary locations, different bank accounts, fragmented banking setups, all of that for many of our clients, that it does prevent a real optimization of the liquidity that they hold. Now, but this links to also how they can completely upgrade and uptier their whole way of doing business, if I say that. We would see movement of cash or movement of liquidity is only one part of the entire value chain, but what happens on linked to that process flow is that where is your purchasing center, for example? Where is your regional invoicing center or global invoicing center? Which entity is buying most of your raw material? All these factors are critical into deciding that where are you actually willing to keep this whole engine, which does all of this for you. Because when you are moving all this cash around the world, it ultimately gets moved to a centralized location where all of this is managed. So multilateral netting, for example, which a lot of clients now take advantage of with central bank approvals, of course, because in most markets this needs central bank approvals, is that you bring down transaction cost by not allowing for different subsidiaries to deal with each other, but you bring it to a centralized location where all of this is netted and your number of transactions, net number of transactions that goes out is reduced. Same concept when you use the tokenized way of moving cash around. Of course, you can do the bilateral thing also, but if you really want to bring down the cost of transactions, then you also go to look at a centralized structure. But then it links back to what do you do with the liquidity, right? How do you invest it where you get the highest returns? And how do you decide, is my highest return going to come from investing in a market instrument? Is my highest return going to come from investing in a capex expansion? Is it going to come from paying my suppliers sooner so I get a discount in exchange of it? So these are decisions which again links to how much information a corporate has about their entire value chain, about their supply chain, about their customers. So these factors, I know you were talking to me offline around data intelligence and how you're providing these inputs to your clients for decision making that is faster and more automated. So we would go into a lot of this analysis with clients before advising how should you move your liquidity around and to which location so that you get the best bang for your buck.
Yeah, I heard you. So it's very interesting you come back to the basic, right? So basically you have to understand the business. Based on that, you design your treasury structure.
Yes.
So that will allow you to decide where to put the liquidities, what currencies, and when to move it. And secondly, you also talk about actually the organization structure, which allow you to appropriately position different kind of functions within the region or even globally.
Yes.
Based on that, so-called real-time treasury can really function, add value to the specific company that are actually using this structure. That's very valuable. When not only look at the tools itself, but also come back to the basic about how the architecture should be designed.
What location it is and where are the people going to sit, for example, who manage this treasury center. All of these are very crucial decisions.
Last but not least, what would be the advice that you give to kind of corporates and the treasurers of financial institutions of operating in this region in ASEAN? So what would be the things they need to be paying attention to for the next, and what are the technology you suggest them to adopt in the next few years?
The key word is technology, right? If I may, clients, as they look to the future, as they look to manage volatility in the markets, I think choosing partners strategically is important. Demanding the best technology is important. So when I talk about that, so we talked about, for example, tokenization, we talked about treasury efficiency. For example, fragmented banking relationships are a deterrent to an efficient system. Now, if your cash is spread across so many different global banking partners, different banks are in different stages of technological advancement. Now, you've got to also decide who are my strategic global partners. Of course, Citi, I would always thumb the table and say that a fantastic global bank to work with a network probably unparalleled with any other in the market. Like 90 countries is a massive reach. So I think first decision is to consolidate a fragmented banking partnership so that you have key people to help you make that treasury process efficient. Second is demanding the best tech from your banking partner. Now, API connectivities are of course, they are coming up, but API connectivity is key to getting real-time data from your banker. if you are getting real-time information on what my balances are across currencies, across markets, then your decision making becomes faster. And all of these automated, programmable, when you talk about tokenized movement of cash or deposits, the best thing is programmable. So you can link a specific outcome to a specific event. It can be linked to a financing decision. It can be linked to a supply payment decision. So then the second step was API connectivity with banks, where you're getting real-time information, and then deciding some of these elements around what state of complexity am I in currently. Should I invest time, resources, technology in an in-house bank structure? Should I have an RTC structure? And then, of course, make a strategy around where my investment dollars are needed and how do I take my liquidity to that location in the shortest possible time. And if things are changing dynamically, how can I move that around as fast as I can without losing the value of money? So all of these things would come together, great companies such as yourself, which are doing pioneering work around all these predictive models, making decision making faster, providing intelligent inputs to clients to make decisions. And our job is to create those rails so that this movement of cash can happen. So now that we are in 5 locations, CTS is live. What we do is we combine this with our 24/7 clearing of funds, Euro and USD included. So on one side, we take in the client funds coming in, they come to the Citi network, gets converted to a token, can move around different international markets. And because of our 24/7 clearing partnership with 50 plus banks, that can go to any global bank in real time as well. So then we are connecting that dot for our clients so that they can do their business better.
Yeah. Technology. I echo your word. Technology is one that's driving this forward. So we are continue to invest into ASEAN and continue to be committed to our customers and merchants over there. We will need more banking services from our core partners, especially those with the latest technology, which enable us to have faster, cheaper, and more transparent global money movement.
Absolutely.
We hope to work hand in hand with you to bring more innovative solutions like Citi Token Service into new markets. For example, Kuala Lumpur, hopefully we can bring it over here sometime soon to allow us to set up more activities over here, allow us to do business here in a more efficient way.
Absolutely. I mean, Malaysia is, it's a fantastic trade hub for an initiative like this, which I'm sure there's so many treasury centers operating here could benefit from an initiative like that. So I think support and endorse the path that ASEAN is on. And I think Malaysia as a country could massively benefit from an infrastructure like that.
Thank you for joining us.
Thank you for having me.
Podcast today. And I look forward to work more with you.
Thank you so much, Kelvin. Thanks for having me. Cheers.